So hi guys, a wonderful good evening to everybody and to all of you. I hope you had a great day up to now and welcome to our Admiral Markets webinar master, the markets. Good evening, Vincenzo. I hope you're doing good. You had a great day. We have already, we still have a celebration day, Labor Day here in Germany. It's a little bit calm and it's okay. But our great new project started today. But in this webinar, we want to focus on our trades and how we can master our markets, especially our Forex markets. So, and the chat is open. If you have any questions, please let me know, because the biggest secret in trading is there doesn't exist any secrets in trading. So it's me, Markus Gabel, and presented by Admiral Markets, master the webinar. First of all, we have to realize and we need to be aware of the risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure that you read the terms and conditions of our service. And this presentation and the accompanying video is for information and educational purposes only. Online educational materials are developed by Admiral Markets, and therefore please take into consideration that the information in this session may not be suitable for everyone. So, since August, we have to be aware about the European Union differs between the regulations about retail clients and professional clients. That's everything the same like every week. So why you have to choose Admiral Markets? Because we have the best index offerings about DAX 30, the original DAX 30, and we have 0.8 points during spread, typical spread during the hours. And of course, the best order education, no minimum stop distances or requotes, Forex level 2 market depth, and account safety, negative balance protection policy, and volatility protection settings. So I see someone is coming into that webinar, and yes, of course, One World Global Offers is registered in England and Wales, and authorized and regulated by the FCA. So this is the most important slide in our weekly webinars. Guys, success is not a fantasy, it's a formula. And a trend continuation is more likely than a trend break. We have a probability of almost 72% if we make sure that the higher time frame is supporting us. And in this webinar, we want to talk about the market and, of course, a little bit education, because we want to close the gap between theory and practice, of course. But that's the most important slide that slide you should burn into your mind, that you be aware of every chart, that you make sure you come out of the correction and you speculate on a trend continuation, of course. Let's keep an eye at the rules we want to take care. Success is not a fantasy. The same here. It's a formula. And you see that's the rule number 5 to 7 describes where we are in the market outside of the fair price, because the price has always the attitude to go back to fair price, to fair valued price. And of course, Fibonacci market profile will show you our targets, and we make sure that the big picture is always support us to our 3 templates. Either we have a trend, or we have a divergence, or we have a great support or resist in that way. So in rule number 1 to 4, guys, that's the point how I can get into a trade. With that rules, your trading has the opportunity to become really calm and focus on rules, and no more guessing about the trend, about the markets. Okay, what should I do now? Long, short, or nothing, or whatever you don't. The rules are able to make calm your trading. That's really important. So rule number one, no trade without a trend. A valid trend is absolutely needed. Then we need a young trend. The older the trend is, the less the probabilities are on our side. So the correction, we want to make trades outcoming of the correction, because a trend continuation is more likely than a trend break. So, and that correction has to run at least 38%, so that we can really make sure that we come out of a correction. And in that correction, we wait for the rebound, for a real rebound. And at that point, Heikin Ashi will help us, because Heikin Ashi is an indicator, or it's a chart constellation. It's a candlestick, Heikin Ashi. You have two candlesticks in Heikin Ashi, either a trend continuation candle or a balance candle. And like the name says, balance candle means you have a balance between supply and demand, and it means it's the end of a move and the start of a correction, or in our case, it's the end of the correction, the probably start of the next movement. So, and that rules we want to realize in every chart we are looking for. So, especially we have two trades working right now. That's Aussie Swiss franc. You see, it's always the same. We reached our first target already, and since then we are back in the correction. So really important. We didn't have a trend continuation. So why not? Because look at this one. I will draw it for you that you can follow my thoughts. It's really important how you can draw the trend in the right way. Movement, correction. Always to the highest and lowest point. Movement, correction. So now you have the move, and then you went back into the correction. So you see, but without a trend break, because we didn't have a real close below the last 0.3, below the end of the correction zone. So the same is valid for the opposite direction. We have the trend continuation, but not really, because we didn't see a close below, or in that case above the last 0.2. So only we would have a close, then we would have a trend continuation, but in that case we wouldn't, because after that the price tried to continue the trend, but it failed, and you can see where it failed, exactly at the point of low. So if it's always the same, if you have that special points in front of your face, it's always difficult to cope that challenge in the first step. Maybe it will cope in the next step. So afterwards, you see we are now in the correction, but no more, no less. So everything is fine. And first of all, you see the point of control. So the fairest price is always here, or is still here at 0.73353. So a trend continuation, first of all, is more likely, and that the trend or the trade or the price will go back to the fair value price is also very probably. So still wait, don't intervene into a trade as long as the setup is valid. Guys, if you have any questions, please type it in the chat box. We want to talk about, it's your webinar, and I want to help you that you can cope your own challenge. Otherwise, you can follow my hashtag Battle of the Titans. It's a completely new project. It's available in every language: German, English, Russian, Polish, from Poland, and Italy. And of course, the next one is French, and then Spain, and some other European languages will follow. But today we started with that great project. And if you want to have more information, ask me in a special email or my homepage, or follow me on Twitter, Facebook, or what do we have? Twitter, Instagram, and Twitter. Yes. So exactly, then you have a real chance to become successful during the whole week. So then the second one is WTI, that's oil. Look at this one, where we are here. And that's the reason why to draw the trend in a correct way is really, really important. Let me show you this one. So first of all, in daily chart, we saw, let's see, in daily chart, we saw this one. We had this situation in daily chart. So as you could see, we were struggling outside of the fair value zone. The point of control in daily chart is placed at $52. We were outside of the correction, outside of the fair value zone. We had some divergence on the upper side, and since then the price went back into the red zone. So that was the big picture. And as you could see, it's always so much important that you have the support by the higher time frame. This is really, really important. So let's see now the hourly chart. Look at this one. Here we had a trend. Never break the rules, guys. Movement, correction, movement, correction. So as you could see, the correction went or ran up at blue, 78%. So our first target in that case were placed at the blue, and here was the balance candle that was on 25th of April. The balance candle, that was a trade of the automatic system of the expert advisor I developed especially for MetaTrader. It transfer my rules into an automatism system, so you never will miss a trade if the rules will fit. So here you can see afterwards the price went down, continued the trend, the lower side, movement, correction. So, and then we had the sharply drop down to $62 here. So the last correction zone, let me draw it for you. The last correction zone, in that case, were placed here between 61, 60, that's what, the wrong one? Here. That was the last correction zone, and that's downtrend. Can you see that? So then everything, what happened since that dropped down, it was a corrective uptrend, no more, no less. It was not the main trend. The main trend was the short trend. Why? Because this trend would be break at 64.96 with a close. And everything in that zone was still a corrective uptrend. It was the correction of that main trend. This is really, really important that you realize that. So, and that was the reason I didn't intervene into that trade up to today. And as you could see, let's see about the Fibonacci. Let's see how far we corrected. As you can see, 68%. It was a correction of 68%. So, and now it seems as the trend will continue to the lower side. And that's the reason why you have never to intervene into that trade. So as you can see, we have the point of control placed down at around $56 in the hourly chart. That's so much important. I don't know what will happen in the next hours or days, but I trust the trend and I trust the price. So a trend continuation is more likely than a trend break, and a price will always go back to the point of control, to the fair value price. So, and the fair value price is placed at the red line here at 56.48. That's really, really important, guys, that you realize that. And with that, with the rules, the trend and the price, trading is not a rocket science. It's really easy to cope that challenge. The bigger challenge is taking place in your mind. Cause why? Let me show you silver. Maybe you remember we started a trade in silver. So we had the same situation. Let's see the daily chart. And the daily chart, we saw a great support here at around $14 here right now. And we were in the green lower zone. The point of control in daily chart is placed at $16.46. So we speculated on a rebound here at that black rectangle here. and that the price will go back. But as you can see, it didn't work already. So what happens? The price went down. Maybe a little bit deeper, or make a trend continuation to the lower side. But the next chance will come. So how we handle that trade in hourly chart? Maybe you remember, because you see here, let's see, I draw it for you that you can follow my thoughts. Look at this one. We had the movement, we had the correction, we had the movement. At that moment we had a valid trend, and then we saw the correction. The balance candles were placed here roundabout, and we went into in that trade here. So at that point we speculated at the reach that we will reach. It was a correction red to red, 61%, and the target were placed at the first 161% on the upper side, the extended version of Fibonacci. So the red line here is the point of control, and the red circle was the first target. But as you can see, we didn't reach exactly the point of control. We miss, I guess, some cents, but not the first target. And I use to never intervene into a trade. Either what will happen, doesn't matter what happens, and never into a trade, because in that moment you intervene into your trade and without reaching your first target or without reaching your stop. You think your opinion is more important about the opinion of the market. The market isn't interested on your opinion or on my opinion. But at that moment, you intervene into a trade. You think you are more stronger, or you are more smart, or you are smarter than the market. That doesn't work on the long run. Maybe it will happen in one trade, but you cannot repeat it again and again and again. In that case, your trading is like an accident. So never intervene a trade. And as you can see, my trade or my stop were placed at that last point at the end of the correction zone here, and here I stopped out. So, and as you can see, there doesn't exist a 100% of probability. There doesn't exist a trading approach around the world who delivers you to 100% of success. Our trading approach, stick on the rules, has a probability of almost 72 to 80% if you use Fibonacci, but no 100%. So this is one. We never break the rules, and in that case, we didn't break the rules. We took care that the higher time frame is supporting us, but in that case, the market decided to go in the other direction. So what should we do now? We have a so much better situation. Why? Let's see. Let's repeat it again. The daily chart went deeper and dropped down, and we are still in the green lower zone. The point of control is still placed on the upper side of $60.46. So maybe this is the bigger zone here, and we can see the correction will extend to the lower side. But at that moment, we will see the next balance candle here, and that area we can think, okay, now the next one is the next correction is stopped here. Let's see. So it's the daily chart. So as you can see, maybe we will have a divergence. So what is a divergence? You see, we will see deeper prices here at that point. So after last correction, we'll see deeper prices. And here in the RSI, that's the RSI measures the divergence. You can see maybe a higher low. In the chart, a deeper low, and in the RSI, a higher low. That means that's a divergence on the lower side. And especially here in that support zone. So maybe this is enough to think about a second trade or a second shot in the hourly chart. So let's see hourly chart. So here we go. And in that case, look at this one. We are deep in the green zone. The point of control is placed above of us. And then we have to wait for the next long trend. Young trend, of course, on the lower side. It's possible. Then the correction, 38%. And then the balance candle. And then we can make a trade. So what should we do now? If you use the expert advisor, in that case, I said, okay, put it in long. Just long, and that is the moment the expert advisor works for me. And if you will find that rules trend in the correction balance candle, then the expert advisor makes it automatically, like the same here in WTI, then in the oil. You can see here, you can see it here. That was the point. So let's see. That's my two working and the loser of silver. Okay, let's figure out some other trades for the next days. Let's make a market overview first of all and switch to the Nasdaq. So always we will start with a view at the daily chart. First of all, the higher time frame. So, and here you can see the market rise up and more, and maybe we will see a higher high, but no more a higher high in the RSI. That means there we will see the next divergence on the higher side and on the upper side. And you can see we are very far in the green zone. The point of control in Nasdaq daily chart is placed 6899 points. And as soon as we see a next balance candle here, supported by the divergence on the upper side, we can think or we can speculate on a correction. A trend? No, not a trend. We have an uptrend here right now. The class correction zone is placed 7512 to 7250 on the lower side. It's no more than a correction. As long as we doesn't leave the green zone to the lower side by a close, it's only a correction. But it's enough to think about in the hourly chart to make a short trend. So let's see the hourly chart. Here we are in hourly chart. So first of all, where we are on the upper side at the edge of the end of the red zone. The point of control in hourly chart is placed 73549 points. If you are interested on that indicator here on the right side, it's a market profile. I will give you the link to that. Here it's in the chat box is the link if you work with that, because it's a really it's one of the best information ever. So let's see. We have to wait if we will have a trend on a little bit higher price, so at best outside of the red zone. So trend is always still strong. Never fight against the trend, you know that. Okay, let's see what we have, what we still have here. S&P 500. First of all, daily chart. Same situation, really strong. New all-time high, 2953. New all-time high. Next correction will come. Wait for that, for the balance candle maybe on the upper side. Next days, maybe next week. Then we will have the positive thing. Here we are in the upper green zone. The point of control in hourly chart is placed at 2789 points on the lower side. And we will wait for the next short trend. So that's support for the watch list S&P 500. So let's see. Next one, of course, gold. And in gold, in daily chart, we are still in a downtrend, but we are around very close around the point of control. The point of control is placed $1,288 here right now, And if you will see here the balance candle today, I guess a trend continuation to the lower side is more likely than a trend break. Maybe we can use that situation in hourly chart. Let's see where we are. Okay, then not, because we are in the lower green zone. Based on the daily chart, we are, how should I say, we are on the short side because we saw the correction up to the point of control. The point of control is like a resist in that way. So we think about the trend continuation to the lower side in daily chart. But here we are in the green lower zone, and we only trade short, back, or at a rebound at the point of control or higher, but not in the lower side, because we are too cheap in one contract of gold. We too cheap, so we will see higher prices. The point of control is placed above of us at $1,310. So I never make trades in the lower green zone short, only to the long side. So let's see, we just have some minutes to go. Switch a little bit to the markets, new trading chances, and this one, New Zealand Canadian dollar. So let's see, we always start with a daily chart. So where we are in the daily chart, first of all, two questions: where is the trend? Are we in the correction or are we in the move? And where we are about the price. So trend is facing downwards. We are very close to a trend continuation to the lower side here, but we are within the red zone. So not really the best situation, and the seasonals shows us a little bit lower prices. Maybe the price will go back to the point of low here, and then we will have a chance to make a correction to the upper side, but not yet. It's too late about in New Zealand Canadian dollar. Not the best idea. And if the daily chart doesn't fit or doesn't support us, it makes no sense to have a look at the hourly chart. It's wasting of time. So let's see New Zealand dollar, US dollar. That's a completely different situation. So as you can see, we have a downtrend. We were in the correction last days. Now we have the balance candle. That means the correction will end, and the trend continuation to the lower side is more likely than a trend break. And if you have a look at the, if you have a look at the seasonals are the indicator shows us the average about the last 5 years. What will happen at that time, the season of the day, at the average about based on the last 5 years. So, and that will show us more falling prices during the middle of May, of course. And then we will see what will happen then. So to make a long trend now in the hourly chart is not the best idea, because first you have a downtrend, you are in a correction, and now you have today a balance candle. That means the end of the correction, because we corrected up to 50% of the last movement. So a trend continuation, and based on the seasonals, it's more likely than a trend break. So then we'll wait what will happen. So in hourly chart, we are in the lower green zone, of course. But about the daily chart, we have to wait. We have to wait if it will be lower, and then we can make a long trade on the lower side. Not yet, because you don't have an uptrend. You have an unclear, really dirty picture here right now, and we have to wait. But New Zealand US dollar could be interested for the next days or 1 or 2 weeks. We will see. Almost the same situation in New Zealand dollar, Japanese yen. So let's see daily chart. First of all, little bit different situation. Of course, we are in a green lower zone. That's okay. That's the positive news here. But at the same time, you can see we have a little bit support zone here. You know, see here, That's like a support zone. Then we were in the move, we were in the correction, but without a really balanced candle that will show us a trend continuation lower side. So a little bit different situation that we can use for hourly chart. And in hourly chart, you can see, first of all, the positive thing, we are in the lower green zone. And we want to go back to the point of control placed in New Zealand Japanese yen, 75.76. So what's happened? Wait for a long trend. Wait for a long trend, and we can start the long expert advisor. So if we will see a long trend, then we can make that trade automatically. If you don't use that expert advisor, please be aware that you have keep an eye every couple of hours. You need an uptrend, you need the correction, you need the balance candle, and then up. So wait, but put it on your watch list for the next maybe 2-3 days till the end of the week maybe. So this is a special proposal for you for that week. It's almost the one of all charts we have. Let's see, I want to show you a British pound cable, because you see we had a great trend. It works. What I try to explain to you here every week. So as you can see in the daily chart, first of all, we were within the red zone, but we saw the deep move, and now we see all the correction based on the seasonals, higher prices. Higher prices were very probably. So based on that, in the hourly chart, you could see where we are, and have a look at this one. Look at this one, the point of control. You can see that the red line here was always since weeks around 1.30 US dollar. And you can see what happened. The price came up from the green lower zone. So you see the price always wants to go back to the point of control, and it still happened today. And it works like a trend. So you see, let me draw it for you that you can follow my thoughts. You see movement, correction, then be aware that you see the next close, not here, with that candle. So movement, correction, so, and then the next close, no close there. So the next trend continuation were here. So did we have a really chance to get into that trade? Very, very difficult. So let's draw it again for you. So movement, then correction. So, and then we have to draw Fibonacci about the rules. Measure the last move from here to the high. So, as you can see the follow things, do we have here a close anywhere at the point lower than the 38%? Yes, we did. Look at this one. First of all, let's see. Here we had a close, and later again here. So, did we have a balance candle we should use? Of course. Here was a balance candle, here sometimes, and here again. But the problem was the time. The time here was at midnight, especially midnight. And I'm not longer on the PC at midnight. So, and here at 5 o'clock p.m. on Monday. So, and here it worked. So, why I didn't make that trade? To be honest, I've forgotten the underlying. I have still forgotten. I'm a human, and I've forgotten to set or to activate my expert advisor. Shit happens. Whatever, it's just only a trade. It means not my life, no more, no less. But as you can see, I'm happy that I can prove you that it's true and that it works what we do here. Trend and price, always the same. And if you have the support by the daily chart, or if you make it in 5 minutes, then the hourly chart is your higher time frame, or is your big picture. You can do the same. So trust the trend, guys, and trust the price. So, and as you can see, I want to talk about why this is so important for you, because it's an education webinar as well, and we want to mix it a little bit. And let's see, I want to show you this one, and we talk about always is one of the most important thing, the business plan. Why do you need a business plan? So look at this one. It helps to find your trading tactic. I got an email today, and one a client asked me, Markus, can you help me? I'm half a year in the market now and I'm not successful because I didn't find and I cannot find a real system I should trade. This is really important if you come into the market. Do you have your own trading tactic or setup? Do you know that? It's not helpful to get into the trade and to get at the market and to click long or short about red or green candles. That's an accident. That's stupid. So figure out what kind of person you are, what kind of tactic or setup do you want to trade. And it will help you to plan your next steps in your trading. And of course, the business plan contains a full subscription of your whole trading business, guides you like a red line, and is helpful for your self-control and repeatings. So it's a red line. What do you want to reach with your trading? I know everybody comes to trading about the money, but very less people keep in trading about the recognition. So what kind of recognition? Yes. What's your real why? You will figure out so many things about yourself if you have your business plan and if you can keep in trading. And if you don't lose your money through the next 3 months, that's not the sense of trading. That's not the meaning of the trading. Trading means earn money every month based on rules, based on tactics. And for that, before you start with your trading business or trading career, make sure that you have a plan. So this is really, really important because Mark Twain says, if you don't know where you're going, you will end up somewhere else. So do you have a plan? Do you already already wrote down your business plan? If not, then it's time for your business plan. It must not be tons of pages. That's not the sense. But you have to figure out what kind of person you are. Let's see what is the content of a personal business plan. Who you are. Do you know your benefits? Do you know your strengths and weaknesses? Do you know how many risks do you want to have in your market? But one of the most important things, who you are. If you don't know it, ask your wife, ask your husband, ask your boyfriend, girlfriend, ask your partner, ask your friends. I'm really sure they know what kind of person you are. Where are your strengths? Where is your power? Where's your weaknesses? Very often we don't know it by ourselves. It's about me. In the earlier time, when I started trading, I always thought I'm so powerful. I'm calm. I'm the coolest guy on the whole damn planet. Then I came to trading. And I was everything, but not a calm guy, not a cool guy. I lost everything. I had so many pains and hurts in trading, and I was not calm in trading. And I was not the coolest guy I thought I am. Of course not. So figure out and write it down. Let it help you from other guys. Or your coach, you have a coach. That's the second choice you can use, that you take a coach and the coach will talk to you, what kind of person you are, and will work with you together. Or the other one, what do you have about your experience, about the technical tools? Do you ever see a chart? Do you ever see a trading platform? But now you are super cool. Of course not. I will honest to you. Of course, I'm really far away from emotions about trading, but trading is always very emotionally. But today, of course, Vincent, I'm cooler than years ago, of course. But now I figured out my real why in trading. And I know very less people have a real why. Okay, the first why we come into trading is about money, of course. But if it would be money the real why behind our intention in trading, we would never break the rules. Do you know that? So money cannot be the real why. So what's your real why? You have to think about that. I don't know it. My real why in trading is to make personal development. That's my real why. And to prove myself that I'm able to stick to the rules always. And why I give some webinars, or why I make this big project Battle of the Titans. Why I created that is I have my mission and I have a vision in trading. Because the point is, just a moment. So the point is, I know one way how you can become a successful trader. There exist tons of trading systems outside there. There exists a lot of ways how you can become successful. Most of that ways are very difficult and complicated and efforts a lot of time and money and so on. So I know a way is really easy at itself, trend, price, rules. And the other one is personal development. And that makes you a cool trader. But not today, not tomorrow, not the next month, month and 1 year, again, round about 1 year, to stick to the rules, to become a disciplined trader, and to become successful. And that's my real mission. I know one way, and I'm absolutely convinced about that everybody has the right and the possibility to become successful in trading. But this is one way, rules, stick to the rules always, and a coach and a community on your side that will help you through that way, and personal development. There is no trading success without personal development. And this is a part of education. And that's my mission, and that's my real why, to help that people they are seriously interested in trading, not the holy grail jumper, not the whatever. It's a service jumper from one guy to the other guy, or from one broker to the other broker. Only I'm looking for guys, or people they are seriously interested on trading success, and they are willing to stick to rules, and they are willing to make personal development. And this is a real part. That's my personal mission and my real vision in trading. And about my Dowhow family, look on my homepage. Around in the middle of that homepage, you see the graphic, you see the picture of the success. We updated it every month, and now the next numbers will come because April is over. And we are in the plus an average about every trade in my community after 4 months, almost 8%. That's serious. That's stable. That's consistently. It's not a success. It's not an accident. It's based on rules. And I guess This is the one important things in trading, how you can become successful. So what do you have? Where is your goal? What's your real goal in trading? Financial, private goal. That's I'm talking about the real why and how you can reach it. Meaningful or useful ways, which steps you have to go on, and at least when. It makes no sense to think about a second setup in trading or a third setup if you don't have your real why, and if you don't have a real broker, and if you don't have a real money account, and so on. This is the big deal in the business plan. So your home exercise till the next days is write down your own business plan with that content here. Who you are, what do you have, where is your real goal, what's your real why, and how you can reach it. And we want to go intensively in that topic next Wednesday. So I'm very grateful for your lifetime you spent with me through the last 45 minutes. I hope you learned a little bit about that, and we prepared some trades for the next days, and we will see what will happen. Maybe we will see each other tomorrow at 11 at Admiral Markets at our trading ideas, and we can repeat it tomorrow or we see each other next Wednesday, same place, same time. I wish you a nice evening and a nice, great rest of the week, and take care, and always be careful about your thoughts, because they are the beginning of your actions and deeds. Thank you for your time. Bye bye, guys.